For my day to day, I've tried to start this business as a financial advisor. I've got a master's in finance from CU Boulder a couple years back, and I've recently opened my own practice.
Awesome.
So, yeah.
How long have you been interested in becoming a financial advisor? I saw that you've been doing it for around 10 years.
I've been doing other stuff for around 10 years.
Other stuff.
Yeah, I know. I got to update that on the passage. That was more of when I was looking for like employment. Yeah, I spent a lot of time in international business, and I worked for a tire company that imported tires from China and Thailand. So a lot of my job was traveling to other countries in different parts of the world and learning cultures, negotiating prices, things like that. But that really wasn't who I was. And a few years ago, I really started this journey. I got into real estate because I wanted to learn how to buy and sell real estate and invest in that stuff. And then I took it a step further. And so my practice is coming up on a year, but I've
awesome.
really been doing, I've really been getting more into this field for like 5 to 7 years.
Oh, awesome. Yeah.
Yeah.
How crucial was your college degree, college education in getting to the position you are in today?
It was more crucial than I think I realized. My college degree was in sports management,
Mhm.
but in my opinion, a lot of college is about building relationships and learning how to interact with people. And so I think that was really crucial. I have a lot of good connections from when I went to college, and it really helped me grow my business and grow my investment portfolio and things like that. So I think that was pretty crucial. My finance degree from CU, I think, was really, really crucial because that really opened my eyes into the world of finance and how a lot of this stuff works, and really got me back more into a quant setting in my mind. And so, I mean, really like the math behind it, the people that I've met, the things I've read, the experiences I've had, it was really, really crucial. I kind of feel lucky that I've been in all the places that maybe I should have been at the times I've been there.
Yeah. Awesome.
So, yeah.
Well, that's really good for I'm a freshman, so it's good to hear
Nice.
that I've got some good years ahead of me.
Yeah, for sure, man. It's gonna be fun.
I guess to kind of go off of that, outside of college, what have been some tips, tricks, books, things like that that have really propelled your career?
I've dealt with a lot of people in a lot of different situations, and I went to college in a kind of a fake ritzy area. It's Boca Raton, Florida, is where I went to college.
Mhm.
So there's a lot of like, I guess, fake money there, and I worked down there. And so what you see is people will go to insane lengths just to sort of look the part,
Yeah.
right? And so I worked at a car dealership for about a year, and it was a high-end used car dealership, and people would come in and they're making like 2, 3K a month payments on, I don't know, a couple-year-old Bentleys, stuff like that, and they're going to get repossessed 6 months later, and then they're going to save up and they're going to do it again. And so that really helped in sort of understanding the way people see themselves and they see money and their interests. From there, I moved to Albany, New York. I worked in a warehouse, and that was a much different feel, right? These were a lot of people that were closer to the poverty line. A lot of them had government benefits and things like that, and their priorities were much, much different. None of them really had new cars. None of them were really trying to impress people. They were just trying to survive. And so just seeing what was important to people and how they behave, and it just helps me make sense of what's going on, and it helps me help them make sense. I spend a lot of time with behavioral finance. I really think this is a cool part of the field. And so, I've gotten really good at showing people that they have say, a representative bias or something along those lines. And so, just having different experiences, being in different parts of the world, seeing how different people behave within their environments, I think is really, really crucial for
Yeah, that makes a lot of sense.
me.
Kind of like the psychology and the behavioral science behind it is something I really want to to learn more about. So that's
Yeah,
cool.
that sounds really cool, man. I've really enjoyed behavioral finance.
Yeah. Guess kind of what are your thoughts on the economy at the moment?
What are my thoughts on the economy? Well, it's very interesting, right? So, in theory, if inflation were to go up, stock prices should go up,
Hmm.
right?
Yeah.
The company is now relatively worth the same, but the dollar's worth less.
Yeah.
But it never works that way because there's so much of a behavioral impact in the markets. So, when inflation goes up, stock prices go down. If you took a look last week, inflation data cooled a little bit, and we had a day where it was up like 3-4%. And so it works very counterintuitively, especially in the short run. I am of the belief that in the long run, markets are fairly efficient. I don't think that either the semi-strong or the weak form totally holds, but I do think we kind of vary in a state closer to one another and just sort of go back and forth. Clearly, the strong is too much, but yeah. So going forward, who the hell knows, right? That's kind of the point. And so you really only get a couple of weapons as in terms of an advisor is what you want to do here. The biggest one is you can rebalance positions, right? You can, if you think maybe it's going to be a worse year, maybe you want to shift from a 60-40 to a 50-50. If things are cheaper now, maybe you want to go more in, maybe you want to go 70-30. So that's about as far as I'll take it with people. I'm not an individual stock picker.
Yeah.
I try to temper people from making predictions. They tend to be costly and they tend to highlight like overconfidence.
Yeah.
So, you get one, you get two right, and that's it. I'm a genius. I know how the stock market works. I'm going to go all in on Facebook or whatever.
Yeah.
And so, I just, and that's the point is, I know kind of how it works, but I don't know what's going to happen in the future. And for the most part, most people don't. So, really buying and holding, buying broad markets, trying to not live and die with the day-to-day returns is really a big thing that I try to preach. And yeah, I mean, predictions are tough, man. I mean, I could tell you, maybe it goes down next year. Maybe, traditionally when they have a year like this, the next year tends to be up. But I don't really love where the cape ratios are still. So maybe they're still overvalued. Maybe there's more optimism now because, inflation goes down. Maybe there's less money to go into the stock market because now you can get such better returns on your bonds that all of the risk adverse investors don't need to be in the market to get anything, right? To get more than like 15 points. So, you just don't know. But, if you can sort of buy everything, as I like to say, and ride the wave, that tends to lead to the best long term results.
Yes. Yes. Yeah. It's definitely different, talking to a professional versus kind of what you see on social media and stuff. you know.
Oh yeah,
So that's really cool to kind of get into that mindset, that thought
yeah.
process. Um, so I guess kind of uh, next question will be a little more specific. Um, how are you going about investing your money over this next couple of quarters? And if you don't want to answer that, that's totally fine.
No, that's totally fine. So I'll tell you, I like to make what I call macro plays as opposed to micro plays. I'll give you an example. At the end of 2021, I took out a loan for investment purposes, right? I was getting less than 3%. I had some friends in the industry that kind of thought inflation was going to be a problem, and I thought this was a safe bet, right? I'm not shorting anything, I'm not over leveraging myself. And so, yeah, I took out some money. I bought some flex space warehouses because I didn't want to go into anything that was that flooded, right? I don't know if I should say this or not, but I'm kind of scared of the residential rental market.
Mm.
Everyone and their mother has a rental property. there's just so much unrest with the tenants that I don't really know what's going to happen. But I do like it eventually, right? But for now, what I've been doing is I buy some broad market index funds. I try to differentiate between large, mid, and small in the US and a little bit of emerging and developed. And I've contemplated going into frontier. At the moment, I haven't. I kind of like a 60-40 US international split for those kinds of things. Um, but yeah, and I mean, that's just one of the things is a lot of the advice that you see on the internet is probably about index funds. I'm sure some of it is, but a lot of them kind of stop at the S&P 500 or they stop at the US stock market. And the US represents about a little bit more than a third of the world stock market. So to just sort of diversify within this one country is not my favorite way to do it. I don't know. This year was a really good year for the U.S.
Mhm.
Even though everything went down, it went down less here. The dollar is really, really strong compared to all the other currencies. But that doesn't mean the next 10 years are going to be that way. That doesn't mean the next 10 years aren't going to be that way either. So I just want to be as hedged as I can be without, doing anything dangerous, like shorting anything. And, obviously I have a bond component that I've had on like a very short term ladder that I may take out a little bit longer next year. Like it's between like 1 and 3 years. We may go to 3 to 5, 5 to 7, something like that.
Yeah,
But I haven't gotten too far with that yet.
interesting.
So yeah,
So yeah, international is something that's a little more new to me. It's a little more advanced in the world. What are your thoughts on some of these markets like China, where they're seeing like such a different economy and just a completely
yeah.
different system?
Well, so I can't make predictions on individual on countries, but what I can say is I do believe that the world is going to grow, right? So wherever that growth is, I kind of want to own it. Try to stay away from standalone markets. Sometimes China is included as a standalone market. Sometimes it's included as a large cap. But yeah, that's the thing is you really don't know. There's a really good chance that by diversifying out of this country, I could be shooting myself in the foot, right? But there's a good chance that I could be shooting myself in the foot if I just bought the S&P 500. So the less I can make it hurt, the better, right? There's a really good saying from Jack Bogle, who was the founder of Vanguard. He says, "Don't buy the needle in the haystack, just buy the haystack." And so that's kind of my investment strategy: is you buy everything and you're going to get the winners, and really throughout history, the winners pay for the losers. And so I can't, right? And a lot of this stuff, in my opinion, does represent a random walk. So, just because it was a bad year, I don't know if it was because of bad fundamentals. I don't know if investor sentiment changed. I don't know if people just wanted to get out of that country. But, I just sort of would like to have a little exposure in most of the places that I can and just live with what we get because
Yeah,
it's really the safest returns in my opinion.
yeah. Um, so I am interested in a little more about how you run your business. So you said you've been doing it for around a year. This one that you're currently doing. Um, how is that going? Like kind of day to day. How'd you get started? Stuff like that. If that's okay.
Yeah, so day to day, I'm getting more into marketing these days, right? It's more up and running. I'm trying to build the clientele portion of my business. But also day to day, I spend a lot of time reading. I read a lot of financial books. I'll read articles. I have people in the industry that I'll talk to and see what they feel about things. I'm involved in the community around here. I have joined the local chamber of commerce, so I'm trying to establish more of a local presence and just be someone that people can turn to in the
Yeah.
community when they have questions or need advice, just a shoulder to lean on. And so, yeah, really, that's kind of what I do. And then there's a little bit of compliance and back office stuff that I
Mhm.
do usually every Monday.
Yeah.
There's, yeah, I'll just go in. You got every quarter, you got to review. I mean, make sure your clients are in things that are suitable for them. Make sure your advertising is up to date. All that kind of stuff. Do my accounting. And so, yeah, that's kind of what I do. I spend most of my time focused on these things. So even if it's not like 9 to 5, if I'm reading like a financial book, I still consider that part of
Mhm.
building myself, which I see as the
Yeah.
business. Um, so yeah, I mean, my days are maybe a little more unstructured than they should be, but yeah, I'm really just a lot of my work now is marketing and building client base.
Awesome. So,
Yeah.
yeah, you've put yourself in a very successful position. A lot of people my age, younger, a little bit older, um, that is, you're in a position that they are kind of working for. Working from home, um, doing what they like to do, all that good stuff. So, do you have any kind of advice for me, for new college students, people interested in finance? Any advice on how to like make that leap from going out of college to starting your own thing?
Yeah. So this might not come out correctly, but those first like 10 years when you come out of college, you're really primed to just eat crap, right? You can kind of survive on less. You have more free time. You can do something more demanding that's maybe higher paying. And you have the benefit of more years to compound whatever you're able to save. So really, in my opinion, those first 10 years are really, really crucial. If you want to lever yourself up, and go from job to job every couple of years, I really think that's kind of more of the uh, path to higher income, especially in today's world. You're not really rewarded for loyalty as much as you were in the last century. Um, so yeah, I think my advice would just be, you can kind of take it because you're young. So maybe be like, don't be afraid of being in a tougher position with maybe some longer hours or something like that. Like I'll tell you, when I was 32 and I graduated grad school, I really couldn't work at a trading desk from 8 to 8. But I just had a kid. But you're in a much better position to do something like that. So getting as much experience as you can and saving as much as you can will really put you in a better position to do that when you're still relatively young, right? So time is on your side, and you just gotta, it's there. There definitely has to be a struggle point, and it's certainly better to get it out of the way.
Yeah,
And
yeah.
so, I mean, that would be my advice. Just if the oh, and also stay away from jobs in insurance companies. There's a real belief out there that it, because a lot of these insurance products behave like financial products, they kind of think they're the same thing. I tend to disagree. I would, if you get an interview for one of them, I would go to the interview, right? I went to an interview for a guy that was selling life insurance retirement plans. And what happened was he gave me an example of one. So I was able to calculate the way it works and kind of how I think it's not beneficial for most people. So I think that was really cool. But there's a big belief in the insurance industry that these people are financial advisors, and I just don't think that they are. Right? The way they'll say it is, you have to sell this insurance product. Oh, but if you can convince people to invest with you, we can get you licensed to do that too. But the insurance path, I don't really think is the same as what someone like you or me would be interested in.
Yeah, yeah. I can
Yeah,
agree with that one. Well, that's all the questions I have. Thank you very much, very much.
yeah, for sure.
um, yeah. If you have anything
Yeah.
else you want to say, or
Well, what part of the industry are you interested in? What, like, did you want to be an advisor? Do you want to work more in investment banking? Do you have any sort of idea yet?
I'm still kind of deciding.
Hmm.
You know, I'm I'm a freshman, first couple months in. And so yeah, I chose finance as my major, and I feel like that gives me the broadest range of opportunity. Um, and a lot of like talking to you and talking to other people is how I'm going to decide. So uh,
Yeah.
that's that. Yeah, we're at the very beginning of decision
Yeah.
making.
No, yeah, you got a while. If you do want to go the advisor route, um, you want to start that as early as you can because
Mhm.
you have to build your own book of business, and the more time that you can spend doing that, the less time you'll have to spend doing that when you're older.
Yeah.
Stuff like investment banking, you can get higher paying jobs. They're probably more demanding jobs, especially right out of college. But yeah, I mean, it's really more personal preference. Do you want to be a salesperson or do you want to like run numbers and stuff?
Yeah.
And so, yeah, you're gonna have a couple years where you can learn more about yourself, and yeah, I'm sure you'll make a good decision.
Thank you. Thank you. Well, very nice meeting you, and
Yeah,
thank you so much.